Good afternoon, everyone, and thank you for joining us. We are here from Malta's Financial Intelligence Analysis Unit, which is Malta's Financial Intelligence Unit and Anti-Money Laundering Supervisor. My name is Roxanne Borch, and I form part of the FIAU's Guidance and Outreach team, a section of the FIAU that is responsible for drafting guidance to subject persons on the proper implementation of their AML-CFT obligations and also for training and outreach initiatives in general. Joining me in delivering today's webinar is my colleague Christina Dougal, who is the manager of the risk team within supervision, and who together with her team and the supervision team have carried out an analysis on a sample of business risk assessment and drew up the business risk assessment paper, which is accessible on our website. I will also be joined by Clara Borgionacci, who is the manager of the guidance and outreach team, who together with Christina will be answering any questions that may crop up later on. I would also like to take this opportunity to remind you that the session is being recorded and that the recording will be available on our website in the next few days. In fact, I would also like to remind you that most of the webinars that we have delivered over the past year are also available on our website for you to watch and also to use as educational material. Kindly note that this webinar is being broadcast as a live event, and therefore you have the opportunity to go back a few seconds, to pause the video and then to resume where you have left off. We will also be taking some questions from the main chat, so we invite you to send us any questions that you might have, and we will get to them at the end of the webinar. So, the aim of the session is twofold. Firstly, to inform you as subject persons of the obligations relating to the business risk assessment, and secondly, to assist you in identifying areas within the BRA that can be improved for the purpose of better understanding and to mitigate MLFT exposure. Now, this webinar will be split into three parts. The first part will deal with the obligations relating to the business risk assessment, which stem from the PMLFTR and the implementing procedures that you as subject persons need to adhere to. The second part then, which will be delivered by Christina, will delve into best practices to ensure that the BRA meets the FIAU's expectations. And she will also be going through common findings and shortcomings in relation to the obligation to carry out a business risk assessment. In the third part, then, we will be answering any questions that you might have. So, let's start off, and to introduce this topic, I would like to start by explaining what is considered as risk in the MLFT scenario. So in this context, risk is the possibility that a subject person is used for money laundering or terrorist financing purposes. These risks will materialize when an internal or external threat is able to exploit the vulnerability within a subject person's process, services, and products to achieve its intended outcome. And as we ought to know by now, international and local standards for AML-CFT require the application of a risk-based approach. This risk-based approach recognizes that different sectors are exposed to different risks, and moreover, the operators within these sectors are also exposed to different types and levels of risk. And so the risk-based approach allows subject persons to prioritize their resources on those areas within their business that are exposed to a higher MLFT risk. And this requires an understanding of the risks one is facing, and then based on this understanding, subject persons can then apply the appropriate mitigating measures. And these include the variation of one's controls, policies, and procedures in order to ensure that these resources are applied in areas where there is a higher than normal risk of MLFT. And here is where the BRA comes in, because when assessing exposure to MLFT risk, an assessment needs to be carried out, one of which is at the customer level, while the other is at the business level. And today we'll be focusing on the latter. And to draw up the BRA, subject persons must examine their business structures, their client base, and portfolio of products and services, as well as any diversification or expansion plans that they might have. Having a BRA is important. Why? Because it helps to identify and assess the MLFT risks that you as subject persons are exposed to due to the activities or the business that you carry out. And in fact, the BRA is referred to as the main building block of the risk-based approach. So how can the BRA be put into practice? If we have a subject person who's offering several types of products, with one product being more susceptible to MLFT, then it stands to reason that enhanced controls should be applied in the provision of that product. In turn, those controls should be suited to address and mitigate the particular risk identified. It's important to keep in mind that the starting point to guiding resource allocation, as well as the level, the timing, and type of controls, lies entirely on conducting an effective BRA. So, in other words, the BRA is a healthy exercise which you conduct on your own business to determine the inherent risk that you are exposed to. So it is not sufficient for subject persons to merely draw up an inventory of the threats or vulnerabilities, but you must also consider how numerous these threats or vulnerabilities are. And this means that the business risk assessment must document the subject person's inherent risks, and that is the likelihood and the impact of the risk materializing itself. So by this, we understand the potential of an MLFT risk occurring in your business for the particular risk being assessed, and also the seriousness of the damage that could occur should that risk materialize. Now, after having determined the inherent risk, subject persons must then consider what AML CFT mitigating measures they already have in place or else are planning to adopt, and establish how effective these are in mitigating the inherent risk. So in so doing, subject persons should not only consider regulatory guidance, but also, in the case of existing businesses, their own experience with the implementation of these measures and policies and procedures that they may already have in place. So, for example, any internal audit reports, any compliance reports or incidents that may have already led to supervisory action. And the application of mitigating measures to the inherent risks will leave subject persons with the residual risk. And at that point, subject persons will have to determine whether they are able to tolerate that risks as it falls within their risk appetite, or else whether they need to take further remedial action. That is either taking additional measures to further mitigate the risk and bring it within acceptable levels, or else to decline pursuing that particular business in its entirety. Now, this obligation to have a BRA stems from Regulation 5.1 of the PML FTR and also from Section 3.3 of the implementing procedures. As you know, or I hope you do, the IPs go into a lot of detail on the obligations of subject persons, but the following are the 6 most important principles. So we have taking steps which are proportionate to the nature and size of the subject person's business, identifying and assessing the risks of MLFT that arise out of subject persons' activities or business, considering the risk factors that relate to customers, geographical areas, products, services, transactions, and delivery channels, taking into consideration any national or supranational risk assessments which relate to MLFT, ensuring that the BRA is regularly reviewed and kept up to date, and also ensuring that the BRA is properly documented and made available to the FIAU or any other supervisory authority upon demand. Now let's go through some of these requirements in more detail. So first, we have the requirement to identify and set out the risks referred to in the PML-FTR, and these risks, as a minimum, should include the ML-FT risks posed by customer types, by geographical connections, the type of products or services that are offered, and transactions that are carried out, as well as the delivery channel through which these services or products are offered. And then you also have to consider other risk factors. So these may include reliance or outsourcing, because these likewise impact the level of risk that one is exposed to. You must also keep in mind that risk factors must be considered from both a qualitative as well as a quantitative aspect. And as you will see in the second part of this webinar, for a business risk assessment to be robust, subject persons need to take stock of the risk factors and assess the existence of these risks from a quantitative perspective. And the following are some examples of how risk factors can be assessed in terms of quantity. Okay, so first we have customer risk. And as you know, this is the risk of MLFT that arises from entertaining relations with a given person or entity. And this may be due to the business or professional activity that is carried out by the customer or the beneficial owner. And some examples of this include considering the customer type. So, for example, their customers are PEPs, NGOs, charity organizations. You have to consider also the ownership and control structure of your customer. So whether there are any nominee shareholders, any bearer shares, or complex structures. You must also take into consideration the activity, the business, and the profession of your customers. So whether your customers have any cash-intensive businesses, whether they are VFA agents, whether they deal with money remittance. You have to consider also whether your clients are companies which undertake activities known to be exposed to corruption or bribery, and also other factors, such as having clients who benefited from residency or citizenship by investment, whether your customers are subject to any sanctions, or whether there is any adverse media which concerns your client. So when presented with these risk factors, what you need to determine is what volume of business do they represent? How many customers are in this category? What is the duration of the business relationships? And that would be the way to quantify customer risk. We have geographical risk, and this refers to the risk that arises from links with one or more geographical areas. And usually this relates to those jurisdictions where the customer is based, has its main place of business, where the activity generating the customer or the beneficial owner's wealth is carried out, or the original or current location of the source of wealth or funds. And this means that we need to look at what the connections with non-reputable and high-risk jurisdictions represent in terms of numbers. So, for example, in the case of financial institutions, the number of subsidiaries or branches within a given jurisdiction. We also need to look at the number of customers or beneficial owners from a given jurisdiction. We also need to determine the number of transactions to and from a given jurisdiction. And one should also consider the number of any other links that expose you as subject person to a particular jurisdiction. Moving on to the next risk factor, and this is the risk that one is exposed to because of providing a given product or service or carrying out a particular transaction. And here we need to look at the number of products and services that you provide and the transactions that you carry out. So we have to determine the number of customers for each product and service. You must also determine the volume related to each product or service. And in the case of financial institutions, for example, one would also need to look at the number of correspondent and trade financing relationships. Some examples of this risk factor include when providing sole registered address and no other service, when setting up companies with bearer shares, if you're providing credit or prepaid cards with either no limits or else high limits, and also when providing services to non-account holders. And the last factor is the delivery channel risk, and this is the risk that arises from how subject persons interact with the customer and the channels used to provide a given product or service. And here we must look at the interaction with the customers and also at the introducers. So when you look at interaction with customers, we have to see how many customers were on board on a non-face-to-face basis. Have you ever met or talked to the customer? This is because not meeting customers face-to-face presents a higher risk of MLFT because you could be presented with a fake identity. And when it comes to introducers, you need to determine whether you are dealing with agents or intermediaries, and if you do, are they regulated? Are they situated in a reputable jurisdiction? What is the number of customers that are introduced through introducers and intermediaries? That is something that you should keep in mind. Now, apart from the risk factors that we mentioned, another obligation which emanates from the law is that the BRA must be proportionate to the nature and size of the subject person's business. So what must be considered here is the nature, the size, and the complexity of the subject person systems and structures, and also the subject person's activities. So by subject person system and structures, what we understand is the number of employees, the interaction channels, etc. And by subject person's activities, for example, if there is a diversified customer base, whether there are any complex transactions, if you offer multiple products or services, whether there is international outreach. So in practice, what does this mean? It means that subject persons with a small customer base that, for example, do not process large volumes of transactions, who provide a limited number of services, who have limited or no international exposure, and who know their clients personally, are not expected to have a complex BRA. Whereas subject persons with a large customer base that conduct their business through various branches, such as banks or financial institutions, the situation would of course be different. This is because they process large volume of transactions, also coupled with the fact that they conduct complex transactions across various jurisdictions, and are also less likely to know their clients personally, and which means that they could offer a greater degree of anonymity than a small business. Here, of course, the expectation is different. And so we can say that the more complex the activities of subject persons, the more sophisticated the BRA is expected to be. And the last obligation that we'll be discussing today is that the BRA should be regularly reviewed and kept up to date. But one might be asking, why does it need to be reviewed? And this requirement, which is laid down in the PML-FTR, stems from the very nature of risk, which is not static but is evolving continuously. And this in view of external changes, as well as changes in the activities or service of subject persons. And so, in the same way, the BRA cannot remain static, but it should be updated to keep up with the various changes. And there are three situations which require subject persons to revise and update their BRA. And the first one is whenever new threats and vulnerabilities are identified. And this comes about when, whilst carrying out their activities, subject persons become aware of risks that were not factored into the original BRA. Information may also become available that new threats have arisen that are exploiting certain vulnerabilities within the sector in which the subject person operates. Then the second situation is that the BRA needs to be updated also whenever there are changes to the external environment within which subject persons operate. And these changes may be brought about by legislative provisions and these changes may be brought about by changes in the legislative provisions, but also through development in technologies which create new threats. And also, the BRA needs to be updated whenever there are changes to the business model or structure or activities of the subject person. What does this refer to? So in this next slide, we're going to see some examples. And the first example is when there is an increase in the number of clients serviced. So the more clients one services, the greater the exposure of being used for MLFT. How is this the case? Because when increasing your client base, you might end up servicing new or more customers with complex structures, for example, or else new or more customers which come from high-risk countries. Another example is when new markets are ventured into and new products and services are provided. And this takes place when subject persons decide to offer new products or services that they were not offering initially, or else that when they decide to target new clients. And these may include high net worth individuals or individuals which come from a certain high risk geographical area, for example, and this leads to the possibility that the risk of MLFT might increase. And the final example is when adopting new technologies. So when using new technologies, subject persons may increase their risk as this new technology might not operate as it should, or it would not cover every risk, and so it might impact their ability to fulfill their AML CFT obligations. But ultimately, what matters here is that whenever you, as subject persons, plan any changes, you first update the BRA, and then once that is done, you would be able to proceed with the changes you had in mind, so such as providing new services, etc. Why is this necessary? So that you will be able to understand whether this planned change will impact the MLFT risk that you are exposed to. This is because if the risk changes, then you need to take the necessary measures to address it. If no event mentioned above takes place, it does not mean that the BRA does not require any review. Subject persons are not expected to repeat the assessment annually, but they are expected to review the BRA on an annual basis to assess whether there exists a basis for revision. So let us remember that the aim here is to ensure that the BRA remains relevant and reliable to the circumstances of subject persons by always being up to date. And so this means that the BRA is effectively a living document, and it should be treated as such by carrying out periodic risk assessments to check whether the risks your business is exposed to have changed over time, and as a result, whether they are affecting the reliability and the relevance of the BRA, or else by making use of the trigger events that we have just mentioned in order to update and change the BRA accordingly. And then if it is found that there is no need to change or alter the BRA, a note should be kept stating that following a review of the BRA, it was determined that it was still current and valid and that it does not require any updates. But if the business risk assessment needs to be updated, then subject persons must review the mitigating measures available to ensure that they are sufficient to address the new risks or whether they need to be strengthened. And they must also review any affected customer risk assessments to ensure that they reflect the new level of risk that has been identified in the BRA. Any revisions to the BRA must be properly documented, so for example through board minutes or to resolutions, to retain evidence that an appropriate review has taken place. And these are to be made available to the FIAU and to relevant supervisory authorities on demand. All the aspects of the BRA should be documented, and these include the methodology that has been adopted by subject persons, the reasons for considering risk factors presenting a low, medium, or high risk, the outcome of review processes, as well as any information sources that were used. And then an decision that is taken in relation to the BRA has to be approved by the subject person's board of directors or equivalent management body. And naturally, such an obligation applies in the case of subject persons that are entities or firms or similar arrangements, but would not apply in the case of sole practitioners who would themselves be responsible to implement and to carry out appropriate BRAs. That was all from my end, and we will now be moving on to the next item on our agenda, which will be delivered by the Manager of Risk, Christina. So over to you, Christina.
Good afternoon. Thank you, Roxanne. By way of introduction, I'm Christina, and I'm the manager responsible for the risk team within the supervision unit. As an explanation, the risk team within the supervision unit is responsible for coordinating the risk assessment process through the collection, assessment, and implementation of risk data arising from various data sources. As part of the analysis, in April this year, the FIAU, together with the MFSA and MGA, drew up a paper highlighting the importance of carrying out a robust business risk assessment and highlighting the main findings as part of the analysis of the BRA provided to the FIAU in the 2020 RQ. As changes in the efforts to combat money laundering are shifting to a risk-based approach, the business risk assessment should be seen as a useful tool to ensure resources are applied in areas where there is a higher than normal risk of MLFT. In fact, the whole concept behind the risk-based approach is to ensure enhanced controls are shifted according to the risks identified to address and mitigate such risks. Having an effective business risk assessment will ensure that the entity is guided on properly allocating resources and that the level, timing, and type of controls are tailored according to the entity's requirements. Through the document issued in April, the FIU wanted to highlight that the exercise of conducting a thorough BRA has benefits that go beyond being compliant with the regulations. Roxanne, in fact, has gone through a number of risk factors which the implementing procedures set as a guideline. Through the study of analyzing the business risk assessment drawn up by subject persons, we sought to analyze and eventually highlight the common trends we come across and what we expect from subject persons in the BRA. We also identified shortcomings that were prominent from this exercise and an element of other good practices analyzed through supervisory examinations. The exercise was conducted on two main parts, which included a high-level review and an in-depth review. The first included analyzing a sample of 240 BRAs submitted by the subject persons as part of the 2020 risk evaluation questionnaire, and an in-depth review analyzing 100 BRAs submitted by subject persons as part of the compliance examinations carried out by the MFSA, FIAU, and MGA between July 2019 and June 2020. In the slide, we can see the distribution of the sample of BRAs analyzed and assessed across different sectors. Naturally, the sample was based on the total population size of the subject persons. So we can see that there is quite a distribution when it comes to numbers, where 67 business risk assessments were reviewed for TCSPs, while 8 business risk assessments were reviewed for financial institutions. The study included analysis of different aspects in the BRA, which includes the methodology adopted by the subject persons, identification of inherent risk factors, assessment of control effectiveness, and ultimately the residual risks that arises from these assessments. When it comes to the in-depth review, we can see the process which was undertaken to analyze the BRA during compliance examination. Like normal processes, the subject person was notified by the FIAU by means of a notification letter, and the number of documentation documents, including the business risk assessment, were requested. The officer reviewed the BRA and other requested documentation, and following this, an interview was held with the MLRO and other staff within the entity to calibrate the information at hand. The compliance examination then proceeded with a sample-based testing to understand whether the application of controls work in practice. Through the sample and interview, supervisors tested the exposure of risks and controls which were being applied and how they were being applied in practice. The information was then analyzed to ensure that this is aligned with the documentation provided. Following this process, the FIAU, MFSA, and MGA then proceeded with communicating the findings to the subject person. Over here, we can see that on a positive note, when comparing data from 2019, the FIAU noted a decrease of 9.1% in the number of subject persons that did not carry out a business risk assessment. In 2019, 24.3% of subject persons population failed to provide the FIAU with a BRA in the REQ, whilst the percentage of non-submitters of the BRA decreased to 15.2%. On this note, I'd like to also take the opportunity to highlight the fact that from 2021 onwards, the BRA was required to be updated on the subject person profile module rather than attached with the REQ. You may wish to explore this further on the FIAU website and on CASPAR. From some interesting statistics, we can see in the slide that self-explain the level of awareness that has increased significantly amongst different categories of subject persons and their adherence to the regulations and the requirement naturally to submit an REQ. In fact, in 2019, we have noted a substantial increase, especially when it comes to the NFVPs and financial institutions as well. As highlighted during the first part of the session, the BRA should have a detailed methodology, which includes a description of the method used by the subject person to conduct the risk assessment. The methodology should be clearly establishing and explaining the approach used to determine the inherent risk and the control effectiveness. Having said this, the BRA methodology was one of the prominent issues analyzed as being lacking in some instances when reviewing the sample. The supervisors noted that subject persons did not include information on the specific approach they applied and whether they did in fact understand the likelihood and the impact of each inherent risk. The FIAU over here is expecting to find evidence of such controls which correlate with the respective risks and how such controls serve to mitigate specific risks identified. The subject person must have a clear and adequate methodology which sets out how to assess the likelihood and impact of each identified risk and how to assess the effectiveness of the respective controls, and which needs to be highlighted in the BRA. It goes without saying that without a clear methodology, so without a clear direction and an indication of what the entity is exposed to and how to mitigate these factors, you as an entity run the risk of missing out on what is important and therefore inappropriately applying measures to wrong risks, which might present a high risk of MLFT. This might mean that you might apply more, therefore you are wasting your resources, or worse off, you are applying less, which brings about a number of complications which will lead to other irregularities within the whole operation of the entity. I'd like to stress on this point because as supervisors, we do not just make sure that subject persons are compliant as a tick box approach, but we emphasize that the business risk assessment plays an important role which influences the risks undertaken and the risk that the entity is willing to take. So to summarize on this aspect, what are we looking for? We are looking for a clear methodology specifying the approach used in carrying out the business risk assessment. This means a description of the method used by subject persons to conduct the risk assessment. The BRA must have a clear explanation of the approach used and should include a determination of the inherent risks and controls. And the BRA should include understanding of the likelihood and the impact of each inherent risk and the calculation of the level of control effectiveness of each inherent risk. Lastly, it should also include a description of how controls correlate with the respective risks and how the control measures serve to mitigate the specific risks identified. As you could understand, we stress on the fact that every aspect of the BRA should be considered as clear and adequate. This is because without a clear methodology, subject persons will run the risk of attaining inaccurate results and in turn inappropriately assessing the risks and controls. Missing out on any of these points we can see on the slide will lead subject persons to earnestly disregard areas which present a high level of MLFT, or worse off, it could lead to the entity focusing on areas incorrectly determined to pose a high risk of MLFT. And this will also not be efficient for the company to use, for the entity to use their resources. The implementing procedures highlight a requirement to identify the risk factors which should be considered from both a qualitative and quantitative aspect, as was described by Roxanne in the beginning of this presentation. Some interesting facts which derive from the analysis of the sample of BRA noted that most subject persons did indeed have identified and assessed their inherent risks. Categories including customer risk, geographic, product, and interface. However, some business risk assessments expected to include more detailed explanation of how the risks, how the specific risks and how they manifest themselves. In fact, a common issue was that the inherent risks were considered as too broad or too vague. Through our analysis, there was also a prominent indication that subject persons shifted focus on a qualitative aspect, but the BRAs were lacking a quantitative analysis. It is important to determine how numerous as well the risks are within the operation rather than just listing down the inherent risk. Most of the times, the inherent risk and control effectiveness were identified, and therefore the residual risk was understood. However, entities were required to delve into this definition more further. Understanding all areas of this equation will help the subject persons to determine whether the risks exposed to are to their liking and ensure that resources are being maximized depending on the residual risks. For instance, the number of people within the AML department is enough for the entity, and whether the subject person should consider having a more robust monitoring automated system or can do with a manual system. The controls put in place should also be detailed to ensure there is sufficient information of how these are applied and how they serve to lower the inherent risk. Before we move on to the next part of the session, it's safe to say that the BRA document, which might be sufficient for one subject person, might not be for the other subject person. This is because the BRA should reflect the entity's business model, operations, client base, and ultimately the application of AML-CFT control measures. The BRA should also depend on whether the entity shifts to a risk-averse or risk tolerance and encourage you to take the appropriate controls accordingly. Over here, we're going to explore some good practices, and the following points will help give the entity a head start to ensuring the proper direction is being taken. Firstly, this is the most important thing to understand. As explained before, what might be good for a notary might not be good for an accountant, and this applies to all subject persons equally. Apart from having different operations, the goals for each subject persons are also very different as well. The FIAU truly understands the need for certain entities to seek help and direction by professionals when drawing up the BRA. And as we highlighted, there is not a one-size-fits-all approach. So we also highlight the need for each subject person to actually know what is in their BRA and apply it in practice. We delved into this topic in detail in the beginning of the session. However, it is imperative to note that subject persons challenge and understand their methodology used to carry out the BRA to ensure that there is effective results when applying the controls. Throughout a number of compliance examinations that I specifically carried out in the last 2 years showed instances where at an onset the BRA seems to delve into all the required risk factors, but then when reviewing the files, a low risk is given to most of the clients, which was a bit different to what the methodology was saying. This is the result of the fact that the BRA is not analyzing all the risks exposed to the entity. To conclude on this point, to have a good methodology, the subject persons must ensure that the rationale behind the given risk scores and ratings are properly explained in the document. All evident risks should be included. We can tie this point with the argument that all BRAs should be different and specific to the subject person. Case in point is the different operations are exposed to different risks, although the implementing procedures guide subject persons to identify risks relating to the main pillars, which are customer, geographic, service, product, and interface. The entity may be exposed to other risks, which may attract a level of MLFT, which the entity might be exposed to. Over here, we stress on the point that the subject person is invited to look at these risks. For instance, if the subject person services cash-intensive businesses, then the use of cash would be considered as a risk factor which should be included in the business risk assessment. Other risk factors may also include adverse media, for instance. It is important to highlight that risks should not be overlooked, and even the lowest risks should be explored and identified for ways to be mitigated. We do also encourage involving different people within the operations of the organization to participate in the identification of MLFT risks, which will give the MLRO and the entity a better insight of issues that frontliners might face. Another important aspect that I'd like to highlight, apart from the risks the entity is faced with, is the understanding of mitigating measures that should be commensurate to the risks identified. So there is a correlation between the controls and risks that should be clearly defined. It's important to note that CDD measures are important to be applied. However, the subject persons should not just stop at CDD measures, but should find other ways to get around the risks present through other means, such as, for instance, scrutiny of transactions, additional checks, and requesting additional information until the entity is satisfied in knowing what the risk is. Through the next 2 points, we note that the BRA should reflect the actual control measures adopted, and the level of control effectiveness should be adequately concluded as well in the document. We've come across instances where the controls which were applied in practice were not the same ones defined in the BRA. This might mean because it was more practical to apply different measures in practice. Should this be the case, then the entity must ensure that the appropriate mitigating measures are adopted. In the document, we also expect to find a reference to the National Risk Assessment and the Supranational Risk Assessment, and the FIAU expects that the BRA drawn up by the entity takes into consideration such assessments, and any divergences from the assessment should also be concluded and explained in the document to identify what might seem different to the entity. Another good practice is that the entity should know the measure of the residual risk and the impact it has on the entity. Ultimately, the entity should be comfortable with this level of risk, and the level of residual risk should be what the entity really wants to take on. Supervisors noted that some entities concluded to having a negative residual risk rating which was determined to be quite impossible, since a level of risk will always be present no matter the control put in place. The BRA should be revised and updated, and on this point, when we understand that something is not working in practice, then comes the need to take a step backwards and update the BRA as the need arises. It is also important to understand that the market for subject person is not static, and neither are the risks. We spoke on a lot of points but the ones that feature as the most obvious but not so obvious is the fact that the BRA should be driven by data and should not only focus on theoretical aspects and simply be a carbon copy of the implementing procedures. And I would like to also take the opportunity that the same applies to policies and procedures. And both documents should focus on AML approach that the entity is taking. During supervisor examination, we have come across instances where the customer acceptance policy documents, documents that clients from high-risk jurisdictions are not accepted, since the entity would have a low-risk appetite. However, then the BRA details measures and controls to be utilized in instances where high-risk jurisdictions are onboarded. The FIAU over here does not have any expectations on what clients are refused, given that the control is appropriately applied. However, it is important to have all documents speaking the same language. Having said this, the BRA should reflect all other documents, which also includes the policies and procedures the entity adopts. So with this point comes about the final recommendation that the BRA should be applied in practice. Needless to say, it would be a massive waste of resources to invest time and money into ensuring the BRA document is robust, but then not applying it in your day-to-day operations, with the risks of having money laundering risks slipping through the net and not being captured through the thorough assessment you have done in the BRA. Like any other foundation, unless the business risk assessment is effectively carried out, there is a serious and real risk that all other AML CFT control structures will be weak or misaligned. Even though it might seem like an added step, we are often told that the entity is aware of the risks it faces, but it is not documented. In our supervisory examination, we do assess whether the subject person do indeed have the knowledge of the risks, and we do take that into consideration, even if the BRA is lacking. However, we still expect that the BRA is documented. In fact, the documentation assists improving and being compliant. The exercise of creating a BRA should be maximized as a guiding tool to assist subject persons in understanding their business and the risks it brings about. However, CSP's subject persons, you can't stop there. They have to identify mitigating measures to maintain our residual risks to an acceptable level. As we discussed, the acceptable level varies from one subject person to another. So this brings us about to the conclusion of today's session. I do hope it was helpful in creating and updating your business risk assessment and use it as a basis to improve your document and the importance of investing in the exercise to ultimately create a document which will help you identify and mitigate risks of MLFT.
Thank you, Christina, for that very informative presentation. And now we will be moving on to the third part of this webinar, whereby we'll be answering some questions live. So some questions have already been answered through the chat, but now we'll be answering some of them live. And joining us for this part is Clara Borgianato, who is the manager of the guidance and outreach section. But first, we have received a couple of questions, which I think you, Christina, can help us to answer. So the first one is the following. Can you give examples of what you mean by the BRA being proportionate to the size and nature of the subject person's business?
Yes, Roxanne. In fact, this question features a lot during compliance examinations, especially when it comes to small-sized operations. It's not possible to adopt a one-size-fits-all approach, and in fact, that is why we mentioned that the risk-based approach should also be applied when it comes to assessing the business risk assessment. But we do highlight the fact that for smaller sized operations, we do not expect overly complex complex document. However, having said this, we can't assume that all entities having 50 clients would be the same. For instance, a bank having 50 clients versus a newly warranted accountant having 50 clients. We're not expecting the same measure. So we can't really say that if you have a number of clients, you should apply certain business risk assessment. However, you have to assess your operations and you need to apply the measures according to your operations.
Thank you for that reply, Christina. And another question that we have received is the following. Can I provide a service that isn't yet catered for in the BRA? For example, a client approaches me requesting a service that I have never offered.
Yes, okay. So firstly, the point of the BRA is to ensure that you understand what the risks are and how you can mitigate them. So you can't take on risks that you already said and you already identified that you would not take and you are not willing to take on. And the purpose for this is to ensure that you are not misused for money laundering and financing of terrorism. However, if you are in a position to assess the risks of the service or of that client before onboarding, then you should do so. If not, you are going to expose yourself to basically a world of unknown risks. If it is a one-off activity, we will not necessarily expect this to be reflected in the update. However, if you are willing to take on the service more frequently, then yes, we do expect this to be assessed in the BRA.
Thanks for that, Christina. Clara, are there any questions that you would like to answer from your end?
Thanks, Roxanne, and thank you, Christina. Actually, there are quite a few questions, and we're doing our best to keep up with the ones that are coming in. So I'm going to take the ones that have received some of them or both. So one of the questions asked whether certain risk scoring systems and certain public indices are acceptable when assessing the jurisdiction and risk. So this is actually a common question that we receive, and in fact, as we are in the process of amending the implementing procedures part 1, we're also providing more guidance on how to consider and how to use third-party sources for assessing jurisdiction and risk. In fact, this was also part of the consultation exercise that we recently carried out on the IP. So when relying on these sources that adopt their own risk assessment, there are some points that you need to take into consideration to make sure that you are on the right page. So firstly, make sure that the assessment that you're using, so whether it's a software or whatever, make sure that it takes into consideration different sources of information and that these sources are reliable. So you'd need to review its methodology to see what sources it's taking into consideration. And when doing this, you also need to make sure that if there are particular aspects of risk that aren't factored in, then you need to make sure that somehow you factor these in either by supplementing with other resources. So to give you an example, if money laundering, a jurisdictional risk assessment that takes into consideration certain high risk factors, certain money laundering risks, but doesn't take into consideration the risk of terrorism financing, then that risk assessment isn't going to be complete. And then you would need to see whether you're going to use that software, that service provider, or whether you're going to perhaps supplement that with additional information. Ensure, of course, that this software, that this system is regularly updated and reviewed, of course, because risks are dynamic, the situations in different countries and jurisdictions are constantly changing, and this software needs to be on the ball so that your risk assessment is likewise up to date. And finally, even if you are referring to an index or another source, don't just stop at that. It's still important for you to understand the reasons behind the risk rating of a given jurisdiction, because then the measures that you are going to carry out to mitigate that particular risk would need to be commensurate. And so it's important that you also understand the risks. There was another question on nationality, so specifically looking at nationality as a risk factor. And this is something that we also tackle in the implementing procedures part 1. Is somebody's nationality a risk factor when considering jurisdictional risk? Of course, what you need to bear in mind. So when assessing the risk associated with jurisdictional connections is the strength of that connection. So if the client is deriving their wealth or their income or has business connections in high-risk jurisdictions, then the risk for you as a subject person is going to be higher. However, if the connection with the high-risk jurisdiction is merely nationality, so for example, the client was born in one jurisdiction, perhaps spent some childhood years, if at all, there, but now they live, they work, they reside, they have their business or their income in a completely different jurisdiction with no significant connections that relate to their income or their business in a way that could impact the risk of your relationship with them, then nationality itself, so on its own, doesn't need to result in a high risk rating. And this is also set out in Chapter 8 of the Implementing Procedures Part 1. So I hope that this is clear. There was another interesting question on the 6th Anti-Money Laundering Directive and whether this will require a change in the business risk assessment. So just to clarify, the 6th Anti-Money Laundering Directive, perhaps this is my personal opinion, when we call it the 6th AMLD, it's a bit of a misnomer in the sense that we're used to the 3rd, 4th, and 5th Anti-Money Laundering Directives as those directives that impose the preventive measures on subject persons. So the AML, the customer due diligence measures, reporting, and so on. But the 6th Anti-Money Laundering Directive, as it's called, is slightly different because it deals mostly primarily with definitions of criminal law. So the main aim of the 6th AMLD, and I'm being very, very brief here, is of harmonizing certain criminal law aspects and certain definitions of criminal law within the different EU member states to make sure that differences in definitions of criminal activity from one state to another don't serve to hamper, to obstacle cooperation among law enforcement authorities. So it's a bit different to customer due diligence and to reporting, etc. So just to give you an example of one amendment that was brought up, one sort of, rather than amendment, one development brought about by the 6th AMLD within the EU is the requirement of member states to ensure that, well, there's a list of 22 criminal activities and all EU member states have to ensure that all these 22 criminal activities are considered in their national law as predicate offences for money laundering. So as offences that can lead to the offence of money laundering. For Malta, this might not be completely relevant. Why? Because in Malta, we adopt an all crimes regime. So any criminal activity that can give rise to some proceeds of crime, so that can generate some form of funds, is considered a criminal offence. So in Malta, we didn't have a restriction or a list of offences that can be considered at law as predicate offences for money laundering. So all crimes can be considered. So this really didn't require a material change in the law. It's also not something that the FIAU took part, that the FIAU was involved in terms of transposition, because it doesn't deal with preventive measures. So that's one example. But ultimately, what I wanted to say is that for Maltese subject persons, we did not envisage any impact on the AML measures that need to be undertaken, at least for Maltese subject persons. If I may take another question, as there were quite a few, and obviously I wanted to prepare a nice thorough reply for you. One question was who is responsible within the subject person to draw up the BRA, and this is something that we definitely want to clarify. Ultimately, the responsibility is on the subject person. So the subject person needs to ensure that they have a business risk assessment. There isn't one specific person within the subject person that's responsible. So if an on-site visit is being conducted on a firm, so not a sole practitioner in this case, and the subject person doesn't have a business risk assessment, we're not necessarily going to point our fingers at one particular person. However, it's the subject person that has to answer. In fact, the FIAU, even in the implementing procedures, we don't require or assign a responsibility to a specific person or a specific function within the subject person to draw up the BRA. In fact, we say in the implementing procedures that the MLRO, the internal auditor, obviously depending on how the subject person is structured, and any other person that's responsible for monitoring the application of AML-CFT measures can all contribute to the business risk assessment. So ultimately, whoever draws it up and however it's drawn up, the BRA, though, however, has to be adopted and endorsed by the board of directors or by the equivalent managing body within the subject person. So those are the questions that I'm going to take so far. I don't know whether you wanted to add any final comments, and I'll leave it to Roxanne and to Christina. So thank you for the questions. There were quite a few, and we're also going to be looking at them more carefully later after this webinar. Thank you.
Thank you, Clara, and thank you, Christina, for your contributions. And this brings us to the end of this webinar. So for more detailed information and guidance, I would like to invite you to take a look at our website, where you can find all the guidance documents that we have issued, which include the implementing procedures and also the paper on the business risk assessment that we also discussed today. I would like also to remind you that you can subscribe to our newsletter to be updated with the latest news and also publications that we issue. So thank you everyone for joining us, and I would like to wish you a good weekend. Thank you.